Hey guys, welcome to this video where we are going to discuss how to predict the next market crash, whether that be the next recession or the next Great Depression. I'm going to show you exactly a secret trick that no one talks about, probably because they don't even know. It's really very simple. If you've never been to my YouTube channel, I am The Impeccable Investor and I teach people how to invest in the stock market. Please hit that subscribe button, then that bell so you get alerted to every video that I make. All right, guys. So if you can see here, what we are looking at is there is a thing called the 200-day moving average. What that is, it is a simple line that goes on the chart. You can go to tradingview.com for free, type in the name of any stock you want, go to indicators and type in moving average with the period of 200 days, right? So you get this line on your chart. It's just this blue line right here. This is known as the 200-day moving average, and it just shows the general trend of a stock. So for instance, when this line is headed down, you know the trend of this stock is downward. When the trend or when the line is pointing up, you know that this trend is upward. It's an uptrend. So right now you can see we're in an uptrend. All right. And this blue line here that you can see is SPY. It is the S&P 500 ETF. So basically, this is the market as a whole. When you hear about the Dow Jones dropping so many points, or the S&P 500 dropping so many points on the news, this is what they are talking about, either the S&P 500 index or SPY. Now, the key feature here that no one discusses, maybe because they don't even know, is this stock chart right here, MMTH, that can be found on tradingview.com. MMTH is the percent of stocks above the 200-day moving average. So there are so many different stocks on the stock market exchange, like thousands, right? Thousands upon thousands of stocks listed on stock exchanges. Well, the 200-day moving average shows the general trend of the markets, right? So if the price is above the 200-day moving average, or this line, the stock market is bullish. It's great. It's going higher. Well, if it's below, then it's actually going lower. So what this stock actually shows you is it shows you the percentage of stocks that are above that 200-day moving average. What does that mean? It shows you the percent of stocks that are bullish. So how can you use this to your advantage? Well, if more stocks are not above the 200-day moving average, well, then that means we're kind of about to go into a bear market, right? Because all like the S&P 500, the Dow, the NASDAQ, their trading price is based on the average of all the stock prices. So if we can see what all the stock prices are doing in one spot, that's the way that we're going to do it. So let's break this down a little bit further and see what we are discussing. So once again, this is the chart of the percent of stocks above the 200-day moving average. And on this chart, we have the 200-day moving average, which predicts trend. All right, so as you can see here, these two drops here in the S&P 500 was during the 2015-2016. We had a minor recession, right? And then back here in the beginning or the end of 2018, we had that drop, right? Well, I'm going to show you exactly how you could have predicted that beforehand. If you can see here, leading up to this drop in the S&P 500 market, MMTH, or the percent of stocks above the 200-day moving average, broke below the 200-day or the 200-day moving average line. It broke below right here. That would have been your indication that the stock market is headed down. It's going to have a drop. So if you can see here, it got alerted to that about a month or two before the actual drop. So what does that mean? That means that you can actually get out of stocks, pick more defensive stocks, or maybe even get into bonds during the time that you know that you're about to see a crash in the stock market. Now, this also holds true here. You can see that it's holding below this 200-day moving average. Right here, it comes down. Right here, it comes down. And it starts to come down before the stock market actually drops, right? So that's the amazing feature. Not only can you see when the stock market is about to drop, but you can actually get a good estimate before the stock itself drops. Now, so if you can see here, this is back in the 2008-2009 housing market crisis. As you can see here, that we had that huge basically borderline depression, recession there in 2008, 2009. Well, if you can see here, back here of June of 07, you can see here that we got alerted that that MMTH broke below the 200-day moving average. Thus, that means that the percent of stocks above the 200-day moving average drop. That means a majority of the stocks are starting to go red. They're starting to go into bearish territory. Well, we got alerted to that in July/June. So when did the stock market actually start crashing from that? Well, it didn't start crashing until April, May of 08. That means you had a whole 6 months to prepare for the crash of 08 of 09 just by following this MMTH, or the percent of stocks above the 200-day moving average. So let me recap this video real quick. I'm sorry if I got too in-depth for y'all. But basically what is happening here is this stock shows us if the majority of stocks are bullish or bearish. When it breaks below the 200-day moving average, we know the majority of stocks are bearish. So we know to watch out for a big drop in the S&P 500 market. All right, guys, if you learned from this video, if you liked this video, please hit that thumbs up button. If you haven't already, please hit subscribe and drop any comments down below if you have any questions. All right, guys, thank you so much for watching. See you in the next video.